Is the Bitcoin bottom almost in? In this video, we're going to be jumping down into the world of BTC, seeing what's going on most recently, but also kind of what I expect to happen slightly longer term. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you've not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. If you are looking for a little bit more from the crypto space, everything from bear market strategies, project reviews, or trading, why not check out the Patreon services as well in the description below. Okay, guys, let's get into this in a little bit more detail. Okay, so here we have Bitcoin best paired up with USD, and this is the weekly chart, right? And we actually using Bitstamp for this particular analysis, right? And one of the things I really want to kind of just talk about here is the differences of what happened previously in terms of 2017 and 2013 versus where we are in the 2022 scenario that we find ourselves in. So the first thing I want to kind of highlight are a couple of really key kind of things, right? A 67% crash here, 133 days in, and then we had a 69% crash at 56 days in. We saw a 56% crash within 70 days. Now, these things are actually really important for us to understand, if I can get my words out this morning. And what I'm going to do is I'm going to focus in on this one just down here for a second, 2013, okay? We're going to just take a look at this. So if I grab hold of this price reduction and we just go ahead and throw that on there, you can see 70% all the way down to that low point there. And if we come down here, you can see 67% right in here. Okay, now if we also take a look at it from this perspective, we have this crash from that high to this high, that's 59%, so pretty much 60. It's on the higher end of spectrum. And if we were to actually take it down into that final low point just down here, we have it at 65%. Okay, so there's a bounce here. Basically, you pull back around 67%, we bounce up, we pull back down towards that 69%. Okay, so pretty straightforward to understand. And then we'll see bounce from here, and again we move back down. If we actually take a look at this one, this kind of move down is again 59%, or we can take a look at it all the way down at the bottom at 77. But I think there's actually a bounce right up here that's probably makes more sense, which will be at 66%. So if I just draw those up again so you can kind of see these all together, you have 66% right there. You then have this bounce point right up here. If I actually grab hold of the price point, we have that point and that point at 65, and then you have this 66 right here. And actually, I think this one's a little bit on the shorter side. It comes in at 59. Okay, so my point here is that on average, we're just over 60% crash on all of these kind of pullbacks, right? And then eventually we hit the bottom. There are, you could argue there's 4, but I think probably the main way to look at it is kind of 3 major pullbacks here, okay? And I think that's kind of then consistent. The first one being kind of a flash crash, then pull back, then crash, and then pull back, then crash, then pull up and pull and crash. So we can say it's between 3, or it's between 4, kind of pullbacks before the bottom is found. Now, of course, we take a look at do the same thing over here in 2017, right? We grab that price point, we go from the high, we go to the low. Okay, this one's actually more of a straight drop at 69%, pretty clear to see, right? Then we come up over this side, and you can see that actually this is more of a steady kind of flow down. So I'm going to take it from here, and I'm just going to kind of pop it down at this end. And here you can see it's 73%. Even if I take it from this last little move, it's 63%. So that you could argue that there's a couple of kind of bounces here, but I think there's 2 major ones, right? We can either say that it was up here at 73, or it was down at this particular low point. This is probably the steeper one, so I'll leave it there at 63% and 69%, right? So you can see here that in 2013, there was about 4, 3 probably are the main kind of pullbacks before you reach the bear market low. And I think in 2017, really, you had these 2 steep ones. Other than that, you're kind of just trading sideways. We didn't really break too low between these points until you kind of got to here, and then bam, you kind of drop down really, really sharply. And so I'm going to leave it at 2. So we have 3 on 2017 and 2 here on 2017. And then we're going to take a look at what's going on up here in 2021-22, right? Because we have initially, if I grab hold of that price point again, we have that high point, and we have this low point. And again, I'll take it all the way over to here. I mean, we could take it from that one, it's 53%, but the actual low was 54%. So I'm going to pop it down there. Okay, so the first pullback is 54%. Then we have a bounce, which actually goes and sets a new all-time high. And then from here, we have an initial collapse down at 52%. We bounce up again, and this is now the big last sell-off, and I'll go through that in a second. Here you can see that we've pulled back at the moment 47%. Now, I still think there's room to go down to about $23,000, which should be on the higher end of the spectrum. I think it's going to be about 50% by the time it's done, right? So this actually then looks like we've got 3 pullbacks of all the very similar kind of levels, you know, kind of high percentage pullbacks, but, you know, right in the same kind of range, right? 54, 52, and 50. So on average there, you are looking at around the 51 to 52 kind of range. Okay, so in terms of percentage points, now if I zoom back out and just pull this back in, you can kind of see consistency between the way that these markets have been moving. You kind of bounce down a little bit, you kind of bounce down a little bit, and you're bouncing down. Now the end of this is really sharp decrease. This one right here, a rapid decrease in the value of Bitcoin. And that's exactly what we're seeing right now. So that's happened over this side and before we found that bottom. This also happened over here before we found the bottom. And of course, in 2013, you can actually see it a little bit more gradual, but right here, that last little moment is very, very sharp. It decreases, 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 and bam, you're at the bottom there. Not as sharp in 2013 as it was in 2017. And I think we've got a very similar kind of mix between this 2017 pullback and where we are right now in 2022. So my point that I'm trying to make here is that we have some form of consistency between these pullbacks. In every one of these cycles, there is some form of consistency. Whether that you want to mark this one up at 73% or 69%, they're very, very similar to where they are. Or as I've got it here, 69 and 63. And then this one, obviously, right in those 60% as well. So I think what we kind of really look at here is I think that we're approaching the bottom for multiple different reasons, not just this, but this also gives us a nice idea or a nice way of really looking at the market from a consistency point of view. You know, we have got a vastly different variables than we had in the previous cycles. And I think it's important that we understand that, you know, we're not going to have the exact same results that we've had previously, right? History is there to kind of help us educate, help to educate us and help to kind of teach us things that happen. But at the same time, we haven't got a huge amount of data. We do respect the history of BTC, but essentially we are also writing the history of BTC, and we can expect things to be slightly different, right? We haven't got the same variables as what was around in 2013 or 2017. We're a vastly different market now than we were back then, and it's important that we, you know, use the history to help us understand, you know, there are some kind of rhythm and some kind of rhyme to it. But it shouldn't be the gospel, and we shouldn't necessarily, you know, really hold on to that history and say it is absolute, we can't do anything different. And therefore, you know, we could be looking at going down lower than $20,000, right? That's a possibility. It hasn't happened previously where you've gone down lower than the previous all-time high. But at the same time, we have had very diminished returns, right? Normally, we haven't had returns this low in an entire cycle going up. So if we are to think of this as a bear market and we're going to pull back down, it's possible that we actually pull back down lower than the previous all-time highs as well. I don't think that's probable, but it is very possible. In the same way that you could see this as a complete macro move, and with the stock market completely collapsing, so does Bitcoin. You could see Bitcoin maybe drop down to $1,000, right? These things are possible. It's just whether or not we think they are probable, and those two things are very worth noting as different, right? And I don't think they're probable. I think they're possible, but not probable. And I think essentially looking at $23,000 is the most likely outcome here. Now, if we come over to Glassnode data, we can see the inflows have dropped down significantly over the last couple of days. We actually did see 53,000 BTC come onto the exchanges yesterday, and the outflows have also diminished down a little bit here, and we see that they actually were 50,000. So the net difference there is 3,000 Bitcoin more on the exchanges than has left. Obviously, my favorite report is the net difference change, and you can start to see a little bit of green here on the market, but not overly too much. And you know, we are aware that accumulation was going on previously. We're still not seeing the amount of inflows that would constitute us thinking of you know, bear markets and things like that. If I just throw this back into 2021, you can see what happened in, you know, April, May, right? Of 2021, that's kind of the inflows that you look for when you got a significant sell-off occurring from the whales. Instead, what you've actually seen more than anything else is accumulation. If I actually roll that back over here, you can kind of see all the accumulation that's been going on since February, right? The balance of Bitcoin on exchanges has actually increased after all of this, but again, that would be that is to be expected, considering the number of whales that were loading their BTC onto the exchanges. I think they were fueling the pullback very, very significantly. But it's also important that we can actually take a look at who's been buying, right? So we know that Bitcoin has been coming on, but Bitcoin has also been coming off of the exchanges. If we take a look at the whales, we can see that they actually did decrease. Let me just zoom in a little bit more on this, right? So if we bring this right back in here, you can see that they were decreasing a fraction here, moving up from the highs of 2,290 whales to basically 2,212, right? So about, yeah, I'm going to say about 80 whales. Yeah, it's about 80 whales exactly that have no longer got 1,000 BTC in their wallets. Okay, so it's it's a reasonable amount since March, but again, it was actually a significant increase. So this is actually again a part of the process here. We take a look at the sharks. The sharks actually were accumulating pretty much for quite some time. Pretty much early Feb, they started to accumulate, and they were accumulating still until recently. There was a couple of whales here, a couple of sharks that have dropped off. You go down by 40 of these sharks. It's not actually that significant overall. So again, I think some people are succumbing to the pressure, but essentially, I think we're preparing for the last kind of buying opportunity. The dolphins here steadily increasing. This is basically people with 10 Bitcoin or more. And again, you can see these guys are just accumulating. They have been accumulating since early February, and that's a steady line. There's a little bit of fluctuations in there, but it's generally nothing really to kind of worry about, essentially. I think that's the long-term kind of good move going up. So from a data point of view, from that kind of perspective, we are not doing too bad at all. If I bring this back down into our hourly chart here, and we actually just start to review what's going on with BTC on the here and the now, we can see that we are obviously tracking this kind of move. We were looking at this as an ABC function. We are kind of getting ourselves wedged down in here a little bit. And we are bouncing, right? So if I try to zoom this out a little bit, right, we can see that we were tracking this 5-wave move down as a sub-wave count of wave 3, and then there's a 4th wave which we're in right now, which I'm thinking is probably going to surge up a little bit more. It all depends on whether or not we're going to get some momentum behind it. I don't know if this is over yet here, on whether or not this is actually now going to start seeing a push up. We have the ability to maybe push as high as about 33, push 34. So this is basically high 33s before we start to see a bigger pullback to the downside. But it is also possible that we continue to run down here in this correction before we start to see any kind of positive action on BTC to the upside on the shorter time frame. Essentially, this is all temporary. This is a 4th wave correction. So if I come up into our 4-hourly chart here, for example, you can see we're just looking at pushing up a little bit and then pulling down towards our low target, which is all the way down here at $22,967. Okay, that's going to be the target for our 5th wave low, depending on how high our 4th wave goes. The higher the 4th wave goes, the lower the 5th wave target becomes. So in a roundabout way, you want to kind of protect this the best you can. Now, if we do take it from our low point down here, and we were to run this up to that hypothetical up there, then essentially we would be talking about moving down to approximately 22,900, right where we are talking, and a possible 25 as the high. There's a more kind of bullish kind of sentiment, but I think essentially 22,900 is the most probable scenario going further forward here for BTC on the smaller time frame. So that's kind of where we are. We've kind of been tracking this move coming down. We're looking for this to kind of finish out down here, and then basically we are looking for 22,900, but we might have to just move up first around that kind of $23,900 range before we can start to talk about a 5-wave move and a 5-wave structure just inside here, pulling us down towards our low point of 22,900. That will be where we have our C wave marked out on the 1-to-1 ratio as well. Everything there is then also kind of mapping out quite nicely as a larger macro C wave, which again, this is subject to change on the macro side. It's no guarantee that that's correct, but I do think that this move coming down here is correct. If I actually go ahead and just tidy some of that up, let me just remove that one. So what I'm talking about here, guys, is that entire move here, A, B, and C, should take us down to that $22,900 range. Okay, so that one's all in, and it's kind of working as you would kind of expect it to. There's a 5-wave structure right at the end here, so it's more like a 5-3-5 or a 3-3-5, depending on how you want to look at this first section. I think a 3-3-5 sits better with it, so we'll just keep an eye on that. But basically, you've got a 5-3-5-3. We'll look for 5 at the end. So guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. If you I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.